thanks so much for joining, guys. And Michael, thank you so much for sharing. It's good to see you. Emily, thanks for joining. I see we have a few others on here. Kevin is out today, and he asked me to step in. And I wanted to talk to you guys about no medical underwriting life insurance. Here's your first marketing tip, marketing idea. Consumers hate medical underwriting. They hate it. That's why you see agents that will advertise, hey, I have plans with no medical underwriting, no medical exams, no blood draws. One that always drives me crazy, no urine. It just drives me crazy because it seems weird to me that we're promoting something about no urine, but that's just what it is, right? So what I wanted to talk to you guys about is simplified issue term life express from Mutual of Omaha. It is my favorite simplified issue term life product. They've been doing this for many, many years. It's a great product, competitive pricing. It's available, as you can see, I'll show you my screen. It is, so Term Life Express is the product name, this second column in this orangey colored column. And as you can see, it is available in all states except New York, Puerto Rico, and the Virgin Islands, which aren't even states. So you can sell it everywhere. Been around a long time. If you're wanting to know how long, just look at the dates in here. Most of these plans were launched in 2008. But the nice thing is, no matter where you are, so Michael, you're in Oklahoma, right?
Yes, sir.
So it's been in there since May of 2008. So long and short of it, you can sell it anywhere and everywhere. So why simplified issue term? So first of all, again, let me reiterate, consumers hate medical underwriting. And, you know, can we stop and talk about this for just a second? Because it sounds, if you're explaining this to a consumer, medical underwriting, it seems like something from 100 years ago. Okay, Mrs. Jones, Mr. Jones, here's what you're going to have to do. Some weird guy's going to come to your house. And he's going to poke and prod you, and you won't know who this person is. You've never met him before. Not a medical doctor, just some guy with a bag. And you've got to schedule time to be home and available. And then when that person comes, here's all the questions they're going to ask you. Hey, Jesse, here are the questions they're going to ask you. And by the way, then they're going to take all of these violating medical requirements from you. Then the insurance company is going to go to your doctor, where they could require blood draws and urinalysis tests. I mean, all of this stuff, when you stop and take, you know, like, what else do you do in your life where anybody makes you go through all that for anything? Like your homeowner's insurance or your auto insurance or your bank. You know, nobody pokes and prods you like that. Heck, even health insurance. Back when I got started in the health insurance business, it was all underwritten. You used to have to go through stuff like that. Nobody does that anymore, except fully underwritten life insurance. It is a colossal waste of time. And let me tell you guys one other thing. I'm sorry if this comes out mean, but I don't know any other way of saying it. Insurance agents are the worst underwriters. They're the worst. And the reason is because we've gotten so out of having to do underwriting for any other kind of product that when I look at the decline rate, the cancel and not taken rate of fully underwritten life insurance, it would blow your mind. We have agents that have 50 and 60% decline rates. And it's not because their customers are in some terrible health, although many of them are. It's that we're not really used to or accustomed to getting into the weeds about people's health like that anymore. We're used to just asking questions, customer answering them, and that's the end of that. which is what we're going to be talking about here today. So I recognize why agents do fully underwritten term. So I just got through telling you all the reasons why not to, but let me tell you why agents do it. They do it because they think their clients are healthy. In fact, they think they're all marathon runners and can qualify for preferred rates, which are cheaper. The problem is most Americans are not preferred. They're just not, for a bazillion reasons. They're just not. So we go into fully underwritten term, and the first thing we're thinking is our customer's a marathon runner, and yet the vast majority of the time they're not. That's why we end up with so many declines. Now remember, even rated cases, I'm telling you, the decline rate is monstrous. But we think we're doing our clients a favor. So let me tell you the favor you're doing. You're saving them, whatever, $10. And you're making them go through all that underwriting, all the blood draws and the urinalysis tests and weird people coming to their houses to save them the $10, which, by the way, you're probably not saving them because you're probably going to end up with a rate up, or in the case of a lot of insurance agents, a decline. You've done nobody any favors. Let me ask you guys this. How long, I know I'm bad about it, fully underwritten. I'm just going to get off the subject in a second because I think a lot of agents think the only way to go is fully underwritten, and that's what's doing their customer their best service. How long, question, how long does it take to do fully underwritten term insurance?
Months.
Months. And a lot of work on your part. Let me ask you this question. What are the renewal commission opportunities with fully underwritten?
Yikes.
There's almost without exception, there are 0 renewals. You don't get a renewal. You get a good first year. But here's the interesting thing. Fully underwritten term has a lower commission than simplified issue. Why do you think that is? Why would simplified issue have a higher commission than a fully underwritten term?
Less expense for paying the underwriters.
You are paying the underwriters. You're paying for it. That's exactly right, Jesse. How are they paying for all these medical exams? The answer is they are taking it out of your hide. Insurance company not paying for it. How much does the consumer pay for that underwriting? What fee do they get? They don't get anything. So the insurance company doesn't pay for it. The consumer doesn't pay for it. You pay for it. And I know agents don't like thinking of it this way. They keep thinking they're doing everybody a favor. By the way, which product do insurance companies like better? Fully underwritten or simplified issue?
Simplified issue. Look at their money faster.
That's exactly right. They do less work. They get their money faster. And if you need proof of what Jesse is saying is true, just look at the comp. You're going to get a 20-point higher first-year commission and a renewal with simplified issue. Insurance companies aren't stupid, guys. They're paying you more because that's the business they want. And because, and here's the biggest problem, is those declines. How much money do you make on declines?
Zero.
How much money does the insurance company make on declines?
Zero.
Actually, if you really look at it, we're actually all in the negative, right? Think about how much time you spent, the customer spent, and the insurance company spent just to end up with a decline. All down the toilet. And a pissed off customer, it's hard to get back. Okay, enough reasons. Do I need to get off of this now? Okay, I'll get off. I was listening to Gypsy. All right. So those are all of the reasons why I do not like fully underwritten term. And I want to talk to you guys about Term Life Express from Mutual of Omaha. Now, There are several great insurance companies in the simplified issue term business. My favorites are Americo, but I want to focus today on Term Life Express from Mutual of Omaha. Right now, so I'm on the Mutual of Omaha. Can everybody see my screen? Yes, we good? Yes. Okay. So at the bottom of the quoting engine, you do have to log in. This is quoting for sales professionals. By the way, if you're not contracted, first thing you should do when you get off this call, get contracted with Mutual of Omaha. All you have to do is go to our website. In a minute, I will post it on to the chat so everybody has it. But you're going to want to get contracted first. Remember, you're doing Mutual of Omaha for life insurance. That is a separate contract than it is if you sold like Medicare supplement, as an example, or even long-term care. So you're going to go to Term Life. Oops, I already clicked the wrong one. Term Life Express. Okay, so I'm going to just pick the state of Texas. Use age 40. No, I'm not age 40, but I'm just going to use 40. I'm going to use a male, non-tobacco. We're going to do a 10-year level term with no return of premium, 250,000 face. We'll skip the riders for now, but I'm going to come back to the riders, and a monthly premium. And that's all you're going to need to get a quote. That's the beauty of it. So can everybody see that? So you get $63.19 a month for 250,000 simplified issue. Now, as you guys know, the way insurance companies sell simplified issue is that the regular rate is roughly equivalent to the standard rate of fully underwritten. So simplified issue doesn't have preferred level classes. That's for the fully underwritten. But again, the mistake that agents make is they think that their clients are preferred, and the data shows that they're not. The average American is not. So even if they get approved, they end up at the standard rate. So now you've done yourself a great big favor. You went through all of that mess just to end up back at standard when you could have just done this and it automatically gives you the standard rate without having to go through that mess. That's what agents keep missing. They keep thinking going through underwriting, they're doing everybody a favor, and they're not. Now, if you do have a marathon runner, fine. But for the vast majority of your customers who are not preferred, your go-to should be simplified issue. Now, you could take it a step further. I started this call by saying consumers hate underwriting. And you will do so much better marketing your life insurance if you market it as non-medical. No medical exams, no blood draws, etc. There's another reason why you want to market yourself that way. The reason is the call centers focus on fully underwritten. Why do the call centers focus on fully underwritten, by the way? Why would they do the opposite of what I'm telling agents to do?
Pastor?
No. The call centers, they market and sell the fully underwritten. That's slower. Why would they do fully underwritten when I'm telling you all these reasons why you shouldn't do it?
Job guarantee for them?
Could potentially, but the number one reason is they want to market the cheapest price. So if you're Select Quote, one of the biggest call centers out there for life insurance, go look at their commercial. Radio, TV, social media, and it's always about the lowest price. You can get $500,000. If you're a 40-year-old, you can get $500,000 worth of quality term life insurance for $10 a month. whatever. So they only want to play the price game. And if you think about it, it makes sense, right? If you're a call center and you're trying to drive a lot of traffic, you're going to lead with price. And what they'll do is they'll constantly shop to see who's got the lowest price. Of course, again, the problem is whoever's listening to that radio ad calls in, and rarely are those marathoners. They are the average American. The average American doesn't get that price. But that's their model. My recommendation is don't play the same game that Select Quote is playing. Don't go playing that I've got the cheapest. By the way, rarely, and with what we do, are we always saying, hey, I got the cheapest, right? People don't want the cheapest. They want the right fit and the right value for themselves. Anyway, so I'm getting on a rant. So simplified issue is nothing but the standard rates of fully underwritten without all the hassle, without all the time suck, and you're going to make higher comp. Everybody wins. And you're going to eliminate your declines. Okay, so that's Term Life Express from Mutual of Omaha. As I mentioned, that was a 40-year-old, 10-year level term for $250,000. But there's a couple of other things that I like about this. There are some riders to take into consideration. By the way, there's also 15-year level, 20, and 30. Again, much, much simpler. There's only those 4 options. Okay. Then there's an accidental death benefit. Not a huge fan of accidental death. You guys ever sell accidental death? Yeah, they sometimes. It's pretty cheap. I don't sell a ton of it, but I do like. Oops. Who's that? But I do like these others. So the disability rider is really a great one because most people do not have disability income. Can we agree? Most people don't. Insurance agents, by the way, are amongst the worst because their livelihood depends on them being able to be out and about. So you can add a disability income rider to it. Super simple and cheap. And now, granted, if you're talking about some doctor making $500,000 a year and you're trying to add disability, this isn't the way to do it. But it's a great way to do it for your average American who their livelihood does depend upon them being able to be actively at work. There's a children rider, and then there's a waiver of premium rider. So there's some good riders on here if you want to add them. I usually don't add a ton. The one that, and the reason I don't add a child rider is usually when somebody says, hey, get your something for the child, I usually want to do something separate. Gerber's got a really good product for those that want to do child life insurance or save for college.
Up to what age?
For this product, 75. 1875 is the age range.
No, for a child.
What's the maximum age for the child rider?
Yeah.
Well, take a look. Still see my screen?
Yeah.
Okay. So this is the underwriting guide for simplified issue. On the left side, these 3 columns are for Term Life Express. The right column is for Living Promise. That is Mutual of Omaha's final expense. Okay. So let's just kind of go through, since you asked the questions, let's just kind of go through and go through more than just that. So as you can see, with Term Life Express, there are 3 categories of requirements: 18 to 50, 51 to 60, and 61 to 75. And as you can see, all of this is non-medical requirements. And most everything is done behind the scenes. You do notice that there is a phone interview, but only as needed. But again, people can handle a phone interview. They just don't like weird people coming to their house poking and prying. Okay. Then there is a height weight chart. And again, the beauty of simplified issue is that question is asked during the application process, so you don't have to worry about getting declines due to height and weight. And they're pretty generous. So like if you look at Term Life Express, the maximum weight, which is the third column from the left. So if you're, say, 5'11", the maximum weight is 298. And you'll notice there's no difference between men and women on this. The minimum weight is 119. Man, I wish I was 119. Actually, I don't wish that. Okay. Then there are, again, beauty of these. We're about to go through the auto decline list, but the beauty of it is you know that up front. Number one, again, no surprises. And number two, if they have these things, the application is going to ask them and it's going to knock them out at the beginning. No disappointments later. Okay. So if there are multiple impairments, the first thing you always want to, just like with anything that we do, you've got to find out if you've got a diabetic, right? That's always a factor. So then you have multiple impairments. So let's say they are table 2, but they have hypertension along with it, or asthma and tobacco risk. You know, there are multiple things that could go towards a decline. Again, all of this is done on the application. Here are some auto decline impairments: diabetes before age 45, an amputation, chronic or alcohol-related pancreatitis, asthma, Hodgkin's, muscular dystrophy, rheumatoid arthritis, sickle cell anemia, pacemaker. Any of those kind of things, you got to go to guaranteed issue type stuff. Okay. Okay. This is kind of a down and dirty underwriting guide. It's not everything. So just to kind of recap, and then we'll take any questions that you guys might have. So first of all, can't encourage you enough. Simplified issue life insurance, higher comp, faster for everybody, same basic rates as fully underwritten standard. Most Americans are standard. Most Americans hate underwriting. Everybody wins with a simplified issue approach. You're going to make more money plus renewals. And you have a marketing approach. Put on your social media, tell all your clients, we focus on life insurance with no medical underwriting, no medical exams, no blood tests. Quit listening to Select Quote, who's just trying to get you to do the cheapest and having you go through all that mess just to end up with either a standard rate or a decline. Okay. As I mentioned, there are 2 simplified issue carriers that I really like. I like Americo, and needless to say, I like Mutual of Omaha, which we just went through. Americo and Mutual of Omaha both have great products, super simple. One of the things I just real quickly before we get to any questions, let me first put in the chat, if you are not contracted with both Americo and Mutual of Omaha, let me put into the chat how to do that. But the second thing is Americo has a great they've got a really great website with a lot of information that's helpful. So if you haven't used their website, it's got, I know it just seems pretty basic, but once you get contracted, you'll want to go into their agent tools section. They got one of the best in the industry. All right. I don't know about that. Questions, comments, thoughts. What do you guys think? Simplified issue. I convinced you? Thoughts about marketing ideas or marketing, anything that we haven't talked about? How do we get prospects? Well, so first thing is, if you have under 65 health insurance clients, you should be talking about life insurance. The ACA window is now closed. So what do you do now? So let's just say you put 100, that's a lot. Let's say you put 50 new ACA clients on this last selling season. First thing you need to go to is contact them and let them know, let's talk about your life insurance. If they say, well, I already have life insurance. Great, let me do a review. Make sure you know what you have. Well, I don't have life insurance. Let's talk about it. I don't think I need it. That's my favorite. You know what? Maybe you don't, but let's talk about it. So the first place you got to go to is your existing customers. And there's a bunch of ways. If you don't want to reach out to them personally, I'll tell you, I guarantee you this will work. If you just email them a newsletter or even just an email once a month, talking about life insurance, I guarantee you every single month that you do it, you will generate one of your existing customers or prospects will email you back or contact you and say, yeah, I'm talking about life insurance. Guaranteed. That's simple. Just email them. A lot of our agents like to use newsletters. I love those too. If you have a newsletter, make sure there's a life insurance article in every single newsletter. I promise you it will generate calls. That simple. What else? What other ways can we generate simplified issue prospects? By the way, I said ACA, Emily, short-term medical, all those people, they need life insurance too. I don't let me lead you to believe that they're any different than your ACA customers. They're all looking for a solution, and you should be the one offering it to them. I'm sorry, Jesse, I interrupted.
Now I forgot what I was going to say.
I'm sorry. My bad.
Oh, I know. When I see someone who's turning 65, I ask them also about life insurance. And it may be only a personal expense, but it's something.
Totally agree with you. That's absolutely a topic for a future call. I love final expense. Again, Mutual of Omaha's got one of the best ones out there. You'll have that in your portfolio when you get contracted to sell Term Life Express. But let's reserve final expense for a future call. I'll talk to Kevin about it. Unless you guys had any other questions, that's all I got. Thank you so much for joining. I hope you found this helpful. Have a great day. I will see you guys later.